Stocks are the most undervalued I have seen them in a long time. Now, with that being said, that doesn't mean every single stock in the entire stock market is undervalued. You can just throw money in any stock and you're going to make money, or every single industry is undervalued. That is not the case right now, but I'm going to go through a ton of companies with you guys. I'm going to show you a ton of companies that are severely undervalued in my opinion, and these companies are not like little hidden companies that no one knows about. These are huge corporations, okay? And how do I determine whether they're undervalued or not? By looking at the type of profits they have brought in the past year and the type of profits they're expected to make in 2018 and going forward. And these companies, guys, are very well-known companies. It's not like there's some type of hidden ones. Very undervalued. So we're going to go through all this. By the way, make sure you follow me on Instagram and Snapchat if you have not already. The links are down there in the description. So before we get into this massive list of companies I'm going to go through with you guys here today, I just want to kind of discuss something. So people always say, well, Jeremy, okay, when you started investing 2008, 2009, 2010, 2011, 2012, all those years, you know, your first few years in the market, stocks were much cheaper at that time. They might look at a situation, they say, okay, Jeremy, stock ABC was $5 in, let's say, 2011, okay? This stock was $5 in 2011, and now in 2018, the stock is $20. So that means that this company is now way overvalued, or this company isn't nearly as good of a deal. Okay, guys, here's the situation. Different times mean different valuations for companies, right? So in 2011, 2010, especially 2009, a lot of these companies, ABC company, they were probably taking massive losses at that time, or they were probably in a situation where they were making very small profits, okay? Meaning their valuation should be far less. Now, if company ABC, now their stock is at $20, which is unbelievably much higher than $5, 7 years later, that could mean, well, maybe they're just making a heck of a lot more money. You can look at, company after company. The majority of companies are making dramatically more money in profits and revenues now than they were, let's say, 7, 8, 9 years ago, okay? So you got to value it differently in different times, all right? Just because this stock used to be $5 or $10 or whatever, and now it's, double, triple, quadruple that, doesn't mean it's overvalued or anything like that. You've got to base it upon what the profits are right now and what the profits are expected to be in the future. Well, what good is a stock if they're not making any money in the end of the day, right? So let's start going through some of these companies, right? Apple, the biggest company in the world, the most profitable company in the entire world, guys. Right now, Apple has a forward PE on it of 12.5. 12.5 on Apple, okay? Google, let's talk about Google. Google, a company that is still growing very heavily. This company has a forward PE of 21 on it right now, okay? 21. Facebook, a company that has massive growth potential still in monetizing the Instagram platform and monetizing the WhatsApp platform. This company right now has a forward PE under 18. Obviously, they're in a lot of mumbo jumbo bad news. It's in the media and whatnot. The financial impact that's going to have on the company is going to be very minuscule long term, in my opinion. Micron, one of the biggest memory chip producers out there. This company has a forward PE of 6, and by the way, that 6 is not even accurate. It's actually around a 4.9 on Micron right now, guys. We're on a 4.9 forward PE, all right? KB Home, now there's just home builders in general are trading like we're about to have a huge recession or something like that, or like we have a bad economic climate, which is not the case whatsoever. So let's look at just a few of the home builders. KB Home trading at a forward PE under 10. We have Lennar, which is trading at a forward PE of 8.5, okay? Century Communities trading at a PE under 7 right now. Under 7, a forward PE under 7. Toll Brothers, the creme de la creme in home building, is trading at a forward PE of 9. Heck, a quarter of their buyers buy all cash. Interest rates have almost no effect on those type of people. Skyworks Solutions, okay? A semiconductor play, one of the biggest semiconductor plays out there. Still a company that has a lot of growth future in its future and whatnot. This company has a forward PE of 12 right now, all right? Verizon Wireless, Verizon Communications, a forward PE under 10 on this company right now. One of the safest business models out there, and it's a company that pays huge dividends. It has a forward PE under 10. JPMorgan Chase, probably the biggest, most successful bank in the entire world, right? They have a forward PE of under 11 on this company right now. Goldman Sachs, the best run investment bank in the history of the world and still to this day, has a forward PE of 10 on it right now. 10. These valuations are ridiculous in some of these companies. L Brands, the maker of Victoria's Secret and Bath & Body Works and all these successful brands, forward PE of 11. They have a dividend ratio somewhere around 6% right now. We have Lowe's. Lowe's, the second biggest home and hardware store, right, has a forward PE on it of 13.5 right now. These valuations are ridiculous, guys. Caterpillar, the biggest equipment maker out there right now, has a forward PE in the 13 range right now. Deere Company has a forward PE under 13 right now, okay? We got just stock after stock are trading at these ridiculously low forward PEs. They're trading at forward PEs like we're gonna go into a crash or you know, an economic calamity right now or something like that. And I don't see that at all, at least right now, you know, 6 months from now, 12 months from now, something like that. Maybe my mind changes, but right now I do not see that type of situation. Why would we have that type of situation? Tax rates are being cut on people. That means the average person out there has more money to spend, okay? Corporations, taxes are being cut, which means, in a massive way, okay? So which means corporations have more money to either give to employees, give to shareholders, do all types of things with it, you know, invest in the business, buy other companies, do all these different things, right? It makes literally no sense why we go into any type of crash scenario right now or anytime in the near future. But yet stocks, many of these stocks, not all stocks, but many of these stocks are trading at valuations that are like, oh, we're going to have some type of huge situation. And my point is like the debt or anything like that. Like people want to sometimes bring up the debt. Well, the debt's going to take us down. The debt has been like that for a long, long time. Like federal debt, that's nothing new, guys. Like that's been around for a long, long time, and we just kind of get through it in situations like that. So if I'm looking out at the economic landscape, the macroeconomic landscape, okay? Now, you know, I usually like to focus on microeconomics, so like focusing on companies. But if we look at the macroeconomics out there, I see a strengthening economy over the next year or so rather than a weakening economy, but yet stocks are trading like we're about to have a weakening economy, which I just don't see at all, at least for the next year. So right now, I would say stocks are very undervalued. I'm a big buyer. I went from a situation where 6 to 9 months ago, if you remember, I was like, right now I kind of, you know, back then I felt like we were kind of, you know, reaching, you know, a place of fair valuation or almost overvalued valuation. We were like creeping up there, but then tax cuts came through, which is massive and on a massive scale. That going through has changed everything. The stock market dropping since then, and then companies just kind of knocking the ball out of the park as far as, you know, the numbers they're reporting and things like that. I'm very, very excited about some of my investments and the investments I will be making over the coming months. And that's basically where I'm at right now. But if you look at that, guys, those aren't hidden corporations. Those are huge corporations, guys, that are trading at very, very low valuations. Facebook at a 17, 18 valuation. I don't think people realize like how many people use WhatsApp and Instagram on a daily basis and how underutilized those platforms are right now as far as monetizing it from Facebook's perspective. Like the amount, like Facebook's going to be $1 trillion market cap company. Someday, probably within the next year or two, once all this little mumbo jumbo here passes, and will probably be a multi-trillion-dollar market cap company at some point in time. You don't just have billions of people using your platform and you're not able to monetize that into $1 trillion+ market cap. Like you can run the numbers and it's very, very simple, guys. So, you know, it's just company after company. Apple at a 12 forward PE right now. Are you kidding me? These valuations are insane, guys. So, net, I'm a big buyer of stocks right now. I will continue to be. But anyways, let me know if you guys are buying stocks right now, if you're selling stocks right now. I would love to know your guys' opinion on all this and kind of the moves you're making out there. But anyways, make sure you follow me on Instagram and Snapchat. Links down there in the description. Thank you for watching, guys, and have a great day.